Welcome to The Curve Weekly, where we read the finance news so you don't have to. I'm Vic Harris, a finance professional and have managed money for many, many clients over the years.
I'm Sophie Hallwright. I'm an ex-radio television producer, and I was really sick and tired of not understanding anything about money, so we started this podcast.
In today's episode, we talk about another crisis on the horizon. It's not a cost of living crisis, it's a chip crisis. Are we talking about potatoes? Are we talking about AI chips? We also talk about how there's been a little bit of a market wobble. But don't worry, we're going to put your mind at ease and explain that wobbles are normal.
Netflix and Warner Brothers, there is movement in the saga that is basically just the ongoing, enormous, I was going to say, can I say penis swinging competition?
So get the popcorn.
Yeah, get the popcorn out.
And there is a scary new stat about how many people are missing out on nearly $1 million in their retirement funds around the world.
And lastly, there's a new wave of feminism, and it's essentially the fact that the girl boss is no longer. I kind of love this new trend, and hopefully we can start all jumping on board because exhausted with trying to do everything. Don't know about you.
And that wasn't lastly. This is lastly.
Oh.
There is a reason why our groceries are so expensive in the Southern Hemisphere.
Oh yeah. This is a really good explanation. If you're wondering why your broccoli is costing $1 million, we're going to explain why.
But before we dive in, Soph has had to dive in to her emergency fund again.
Oh yeah. It's really devastating. Vic, I saw your boyfriend on the television last night.
I feel like everyone did but me.
I honestly got a real fright. I was like, Dad, that's Vic's boyfriend.
I know, he's like, yes, Soph texted me. And then my sister and her boyfriend were like, oh, I saw you last night on the TV. So they saw him. And he's just staring at me going,
Where's my support?
Where's my support?
But I must say he was really good. I was
like, I'll watch you tonight. Oh, no, I can't. I'll watch you Saturday. Oh, I can't. I'll watch you on Sunday, I promise.
I'll watch it online. He was so good. I just thought, do you know, since our last podcast, and I think I wasn't really watching the Olympics, it's amazing. I've been loving, I watched the ice skating.
Oh, yeah.
Watched the bobsledding, which I will say I was a bit question mark around. Is that a
What about
sport?
that one where they just lie on top of each other? Have you seen that? And go down? It's kind of like bobsledding, but like just two people lying on each other.
Oh.
The bobsleds where you hop, four
Hop
of
in
you
the
like
cart.
hop in,
Yeah.
whereas this one, they just lie. Like how do you pick a partner? How do you train for that?
Yeah, it
You
was.
just lie on top of me? Oh, no, you won't do. No.
Oh, I haven't seen that one. That's so
It's
funny.
so weird. It's almost like how do you lie as flat as possible so you don't get any like air friction?
What do you mean they let them bobsledding on their bodies?
There's like, it's almost like a skateboard with wheels.
Yeah.
And then there's one person that lays down facing up and then another person that lays on top of them.
I thought you were going to say facing down.
No.
I was like, that's so.
Imagine training for something that you just lie down and close your eyes and just hope you get to the other end.
I remember we spoke about something on the podcast
And you
while
win
ago.
a gold medal for it. And then someone's doing backflips, twists, turns, landing on their skis.
I know.
And they
but
get a gold medal.
We did have a conversation similar to this a while ago, and I can't remember what sport we were talking about, and someone messaged us being like, oh, remember? And they were like,
Yeah.
Sophie, like you sound like I do this for
Sorry.
a sport. And I was like, oh,
Yeah,
you've got to
no.
remember there's
No,
people
I
that have
know.
trained their whole lives to
I'm trying to be
lie
like-
flat on a skateboard.
I'm trying to be funny, but you're right. There is probably a lot of skill in it. Like people are
Well,
like, oh, you could just jump on a podcast and talk about financial
True,
news.
true.
It's like, no, there is skill in this. There is a lot of skill.
Is it bobsledding where they're in the tunnel and they're sort of just going down? And
Yeah.
That I thought, I
So
don't
fast.
know. Firstly, it's scary. Secondly, what is the person in the front doing? You know, they're just sitting there not touching a thing. It must be body weight or something to do
Yeah,
with
there
like
must
the
be,
way
like,
you
yeah.
sit or.
I would just be closing my eyes and holding on for dear life that we make it to the end. Anyway.
Like I'm having to use my emergency fund in the next week and I'm avoiding it. You've seen what's happened to my phone. I went for a run, which like good on me. I ran about 2 kilometers.
I think every time you go on a run, it makes it on the podcast.
Oh, it does.
So everyone must think you're a really good runner.
You're right. And I'm doing it like once every 2 weeks. That's
No,
so
sorry, I should be
true.
more,
No, you're right. It is becoming like when I do it, I feel so proud of myself. But the point was I tripped over my foot on my last 2 kilometer run.
Yeah.
And fell and smashed my phone on the ground. And now
Do you have a phone case?
Yes.
Oh, okay.
But it went face down. Anyway, it was quite an aggressive fall. So now I'm in the conundrum of do I buy a whole new phone or do I try and just get the screen fixed? Because I feel like the screen ends up being just as expensive.
There's some pretty good places around.
Are there?
Just go get some quotes. Do some research.
But it's do you know what? There's a buffer for it, guys. I've got money aside for this. But for some reason, when it comes to spending it, I just really don't like it.
Yeah.
I don't know why. I need to get over it. It's so annoying.
I just hate having a cracked phone.
It's been cracked for a year, and every time I give my phone to someone, I'm like, oh, sorry, it's cracked. Just happened the other day, pretending that it's just happened and I haven't got it fixed.
Fixed it.
It feels quite unprofessional. I often feel myself thinking, sorry, I feel like I'm really on one. Speaking of,
What did you do yesterday?
No. We had this event that we both spoke at yesterday for BNZ. We were on a panel, and there was 2 other amazing women, Juliet Hogan, who's an amazing New Zealand fashion designer, and then Royal, what was her last name? She was so cool.
Yeah.
Honestly, the funniest and inspiring person. Anyway.
She's a lawyer, a family lawyer.
Yeah, God, she was so cool. And I had one of those moments where I just get really surprised when people listen to the podcast, because I forget that there's these super smart people that listen to the podcast. I just think about the dribble that sometimes comes out of my mouth.
I know. It's like I forget that we jump in a room, we forget that people actually listen. Oh. And that you forget your boyfriend's parents listen, that your parents listen.
I think it's a really good point that it's good that I forget, because I think I would struggle to talk normally otherwise. I'd get so in my head about sounding stupid, or, it's quite good that I sort of forget people listen.
So that they can sound stupid.
No. It's more just, for example, Royal, who's, built and sold a law business and is just this, she was just, and Juliet Hogan, who's been in business for 22 years, who said something to me about, I saw you, when you were here last year, and I thought I should come say hi. And I thought,
To me?
You
say hi to me?
The podcast? I was in awe. So thank you everyone for listening. It's good to know that there's an audience.
We've been doing a lot of events, which is great.
Got another one today. Road tripping to Whangamata. I think next year perhaps we go big or go home. We do one big, a cinema or that's not that big. Maybe
theatre, a town hall.
Yeah.
A stadium.
Yeah. And we just,
Eden Park.
Oh my God. Imagine trying to fill Eden Park. We'd have 3 rows filled.
I think we should do it.
God, it would be so embarrassing if no one
Tickets are free.
Oh, tickets are free. Nice.
We want to fill Eden Park.
Yeah.
And create a movement.
I
the
love
most women
that.
in Eden Park. Oh my God.
That's actually, the best idea ever. How would we do an Eden Park presentation? It would be, and sorry for anyone that doesn't know Eden Park, it's a giant,
it's the biggest stadium in New Zealand.
It's huge. We would need to be quite animated for that to be.
It would be like Bad Bunny Super Bowl. Oh my God, I'm on one. Oh my God, I think this is the best idea.
How many coffees have you had this
Can we
week?
finish this podcast so we can organise it?
I'm here.
If anyone wants to organise it for us, amazing. No, I want to do it.
Actually, go for it.
Yeah, maybe we should just do it before a big rugby game or something. No, because we will fill the stadium.
I think what you don't want is, I was about to say you don't want to be the sort of entree. What's the entree? The opening performance. But maybe you do, because that's less pressure.
Maybe we get Lord to open for us.
I saw her in a cafe in Auckland. Did I tell you? I walked into this really cute little cafe I was at the other day, and she was seated there, and we sat next to her, and I thought, don't look at her, don't smile, don't say anything, because it would be.
And then you're like,
I really wanted to say, your concert was the best concert I've ever been to. It was amazing in London, because I loved it so much. It brought me so much joy. But I thought,
she'd love to hear that.
No, I just feel like you just want to leave her in peace. I interviewed Simran from Friends at Invest the other day, and she was on a flight where Ed Sheeran was, and she I think she was upgraded to business class or something happened, and apparently Ed Sheeran was sleeping, woke up, and as soon as he woke up, someone was in his face, how'd you sleep? Did you sleep well? Love the song Sapphire, kind of, and you're just oh, let the poor guy sleep, No, I don't know.
The price of fame.
Yeah, imagine being famous. Can't even imagine.
No, we will be after Eden Park.
The thing is, I do want this to be the best finance podcast in the world.
Yes.
And I think that it can be.
Yeah.
So could you just share it with everyone you know if you're listening to this? It's so helpful.
And tell them if they listen, they could come to an event at Eden Park next year.
Yeah. They get a free ticket. So last week we spoke about Google's 100-year bond. It's quite a bizarre concept to think about, the idea of someone issuing a bond for 100 years.
Yeah, someone borrowing money and paying you back in 100 years' time.
We spoke about this. If you missed it, do you want to do a top line on what a bond is? Is there any kind of key points?
It's essentially an IOU. So say you were Google and you issued a 100-year bond, and I bought it. So I was like, yep, cool, I'll loan you. Let's say it was for $1 million. I'll loan you $1 million for 100 years, and you just pay me interest for 100 years. But the reason it's such a flex is because 100 years is so long. Like the world can change so much in that time, yet the bond was taken up so quickly, like the demand for it, which shows that people are willing to back Google, you know, for the next 100 years essentially, which is quite
It's
incredible.
a pretty massive tick of approval. So we reached out to Nat. We've had her on the podcast before, and we got her on a few weeks ago to get her perspective on something that was happening in the tech AI space, because she's just such an expert. She lives and breathes AI, and she has really interesting perspectives on the tech industry at large.
Yeah.
So we wanted to get her take on what this kind of means, what it looks like, how she's interpreting it. So we're going to play a little snippet from Nat now.
You're seeing some big investments being made right now in data centers. I'm going to share with you a couple of thoughts of what I'm seeing every day actually working in this space, seeing businesses all over the world use this AI technology. It signals a couple of things. Firstly, it signals really long-term conviction. So AI kind of used to be this feature, and now what we're seeing is AI has kind of become this foundational infrastructure. It's become like railways, like electricity grids. It's kind of, particularly when we're talking about these bonds that have been raised, it's kind of similar to how governments once financed bridges and railroads and power grids. We're not kind of seeing this AI as a feature phase anymore. We're definitely moving into this infrastructure build out phase. So what that actually shows us is that yes, this infrastructure phase requires, 100-year commitments to make this happen. So that is what it's signaling, is that AI is becoming part of the fabric of society and how we work. Because organisations are making 100-year commitments. What I'm also seeing in my work every single day is this, that signals obviously the demand for this 100-year investment is, the demand for AI chips is way outpacing the supply. I hear it every day with businesses who cannot get their hands on these particular chips. You've probably heard of the company Nvidia. They're very well known for their chips. Everybody wants them. They can't build them fast enough. So the other reason kind of why do we need such like long-term commitment? It's this concept called inference. So let me break this down for you. Every time you write into a question into ChatGPT, that is inference. Every time your bank uses AI to detect fraud, that is inference. Every time you design an image, say on Nana Banana with AI, that is inference. It's kind of the live answering part. So AI, when they do the training of the AI models, that only happens every now and then, but the inference part, that happens all the time. So every single time someone uses a model, we're calling inference. Now imagine kind of billions of searches that is happening, millions of enterprise workflows, developers completely changing the way they're coding and using AI, customer support bots running 24/7. Every single time one of those requests is made, it needs a chip to think. So that is why you're seeing this inference demand, which means more chips, which means more data center build out. So yeah, that's the kind of the why and the bigger picture behind what you're seeing behind these huge investments in data centers. It's we're moving from this like AI as a feature, as an app, into it becoming critical infrastructure of the next generation. My final thoughts actually is something that Soph said. She said, I'm worried about keeping up with AI. I feel like I need 30 minutes every day to keep up. If you're thinking like this and you're worried about needing to keep up with AI, let me put your mind at ease. You do not need to keep up with AI every single day. Like that is absolutely unnecessary. Like I'm working in this space and you just don't need to. What you need to do is look at how AI might be useful to you in your role at work, in your business, maybe you're teaching, like whatever it might be. Find something that's exciting for you and lean into it that way.
That's actually such a good piece of advice, rather than feeling like you have to be across everything. find something that's interesting and lean in. I really like that.
Yeah, I did his talk last week at a conference, and it was about the financial services in New Zealand, and everyone was like almost like not panicking, but everyone was just a bit like, we've been left behind. Oh my gosh, like, and it was, I don't know. There's a lot of fear when it comes to AI, but I don't know. Like she said, it's like the infrastructure. Like it's gonna be here for a very, very long time, and yes, it's gonna change how we do things, but you don't need to be at the forefront all the time. I don't know. I feel like I'm constantly evolving in terms of like my use. It's like, cool. Firstly, I use it to like be more efficient with content creation or emails or whatever. And then it's like, okay, cool. That's done. Now I want to use it to do tasks and like connect different applications. Cool. We've done some of those. You know, like it's like you start like clearing away like the efficiency line in terms of like what it can do keeps moving. Does that make sense? Like the better you get, the more you realize, oh, I can actually be done away with that, and I can actually be done away with that.
I think the reason I feel as though I need a 30-minute every day or to put time aside, I'm just one of those people where I was the last to get Facebook. I was the last to get Instagram. You know, I definitely am, I would say actually a slower adopter than you.
But I think the last in terms of what are you benchmarking that against,
All
right?
my friends at school when I was 17.
Yes, but like that is still a tiny, and still probably the like top 10% of the world. Do you know what I mean?
Yeah. I just think I don't know if I spoke about this on the podcast, but I was reading, there's this amazing weekly, almost like article magazine that gets delivered in the UK called The Week. Point was, one of the articles was talking about AI girlfriends and boyfriends, and they were talking to different people about how integrated and how obsessed people were with their AI partners. And there was this guy on there that was talking about how he's in a relationship with this woman who's AI, and how they're wanting to adopt kids and raise a family together. And he's quite seriously saying, I realize that our kids will, you know, their mother's going to be a bit different to other mothers, you know, and they'll realize that eventually. I was like, I'm sorry, is he? And then there's all these other women who are, and men who are totally normal, very educated and great roles, who have these AI partners, and they talk about they're just so genuinely in love. And I just was sitting there thinking, I can't believe that this is happening, and I had no idea. And I feel like there's so many spaces like that it's moving so quickly.
Do you think if you get everything that you need out of a computer or out of AI, emotionally and everything, I mean, sexually, don't know how that works, but you know what I mean? Then it's...
Look, all I'll say is it freaked me out. And I thought, what is my USP as a partner? What am I bringing to the table?
Oh my God, are we going to have like...
Are we going to be competing not only against everyone on a dating app, but also every fictional AI
gonna have
woman?
like...
You can design how they respond, their sense of humour, what they look like, their sexual preferences. I mean,
I think it's good for countries that are really battling loneliness. I think that is...
But is it to then be in a relationship with an AI person?
This is a whole can of worms. But one thing Nat did speak about was the chip crisis, and that is becoming a really big thing right now. So we've had some news out, like we had the cost of living crisis. We now got a chip crisis. Like, can we just go a wee while without some crises happening?
Yeah. Can everyone just panic and stop?
Crises?
Crisi.
Some crisis happening. Someone said to me that kiwi, that there's no kiwis.
Are we talking about the fruit or the animal?
No, New Zealanders.
Oh, yeah.
Kiwi. Like if you're talking about multiple people, there's multiple kiwi.
No, it's not. It's kiwis.
Yeah, that's what. Anyway, I was like, it's like sheep. No, it's the opposite to sheep.
Sheeps.
No, it's like.
No, it's like saying it's like
so
sheep.
many kiwi around. That makes it sound like the bird or the fruit.
Oh, okay.
Anyway. But yes, what Nat was saying is like the amount of chips that we now need, like prices of chips have gone up 75% last month. People are really struggling to get their hands on these chips to support the AI demand. And that means we're going to see higher prices for phones, laptops, TVs, even cars that use AI now. But this is like with anything, right? When there is limited supply and massive demand, prices rise. And this is exactly what we're seeing. NVIDIA can't make chips fast enough, and everyone's demanding theirs because they're the most powerful. That's why we announced it was last month or a few months ago, all these companies like Meta and OpenAI that are trying to secure chips because they can see the demand and supply imbalance and how prices have gone up 75% in a month.
And so do you think that's why a lot of companies want to put these big long-term contracts in place? Because they know high demand equals more expensive. So if they can lock something in at a price now, it means that they're not then scrambling and having to pay more, because
it's like if you were a t-shirt manufacturer and you knew that everybody was wanting to wear t-shirts right now, yet the cotton that goes into the t-shirts, the like premium cotton that everyone wants, is going to run out, or you can only produce a certain amount for like 50 t-shirts and you needed 200. So you're like, gosh, okay, I need to secure that full 50 so at least I can make 50 t-shirts, because otherwise if someone else secures that 50, I'm making 0 t-shirts. Do you know what I mean? It's like, how do you secure that supply so that then you can be confident in your revenue growth and your demand? And it also helps like NVIDIA, so if OpenAI is like, look, we want, billions and billions of dollars of chips and we're prepared to secure that from you, that allows NVIDIA to go and build manufacturing facilities that they can then increase the number of chips, or they do co-investments with OpenAI to be like, look, if you can say to us that you're going to buy X number of chips from us, that de-risks building a whole new manufacturing facility, particularly if you're going to pay for some of it. So do you know what I mean? It's kind of like, I'll help you if you help me kind of thing.
But it is also, it's quite clever, because I remember thinking when all those contracts came out around NVIDIA and them agreeing to a 3-year, whatever it was, there was something a few months ago. And at the time I remember thinking, God, that's quite risky to invest for, to get into a contract for such a long period of time for so many chips. But actually understanding what you just said, there was this huge like penny drop moment for me where it's actually businesses being really clever, because they've got the foresight of supply, demand. When there's lots of demand and not enough supply, prices get more. And so if they can lock something in at a lesser amount, it's actually clever from their side, because they can see what's going to happen to the
and
price
they
trajectory.
Are probably seeing demand that is, I don't know, say $100 billion worth, and they're only securing like $50 billion. So there is still that buffer that if demand didn't actually come to fruition at that full 100 billion, they haven't committed, they don't overcommit on the demand that they're seeing, if that makes sense. But that's what everyone's fearing is like, okay, have these companies like OpenAI and Meta and Google, and is what they're seeing true demand, or are they
inflating,
overestimating it, and then what's actually going to come to fruition is less? Then they're locked into these contracts. You've got these 100-year bonds. You've got like all of this stuff because you thought demand would continue and extrapolate and get bigger and bigger and bigger. And that's what the market's fearing. And the market is actually, the last week has actually had a bit of a wobble, which is fine. But everyone's like, oh my God, everyone loves it when the market falls.
Loves the drama, don't
It
they?
loves the drama. The news headlines love it.
But it's similar to the idea of a floating or a fixed mortgage rate. You don't know what's going to happen.
No.
You can choose to lock something in and say, oh, I think 3% is great, but it could drop below that, or it could go way higher, and you're kind of taking a gamble either way.
And that's business, right? Nobody knows what's going to happen around the corner.
Yeah.
We could have an atomic meteor hit the world, and then half the population's wiped and half the demand for AI is wiped.
Yeah.
It's,
you just never know what's going to happen.
But that's why like who runs a business is so important. If you're investing, you've got a founder-led business, or like you've got a CEO who's been there for a very, very long time, like NVIDIA. So he's the founder, but you've got NVIDIA that's gone through these cycles, and kind of knows and has weathered them and can steer the ship in a really sustainable way. But
it is so ancient. Imagine a ship, imagine a storm.
Yes.
He's trying to get through
Going
it.
over the waves, over the swell.
Will we make it to the island?
But we are seeing a bit of a wobble in the market. It's like the tech names are off kind of like 4 to 7%. By off, I mean down.
Yeah, thank you.
Not off like used by date.
They're expired.
Yeah.
So basically, has the whole market fallen?
This year, last week, yes. Yeah.
By how much?
By about 2%.
Yeah, okay.
So it's not a big move, but it's just like when we've seen it go up and up and up and up and up, it's like, oh, it's down, but it's healthy. It's healthy, and we need to remember that. And if the podcast next week we're saying it's fallen, another another couple of percent, and then it starts getting, people are saying, oh, is this the start of a big correction or whatever? It's like, if it is, it is, and I think we've had a really, really great run. I'm not calling a stock market fall. I'm just saying that, these companies have done fantastically well, particularly the tech companies, and a little breather is healthy.
Yeah, and I think it's also worth just saying, if you're opening your portfolio or you're looking at your investments and it looks a bit worse than it did, that's why. Because it doesn't necessarily mean that the things you've invested in are all of a sudden doing badly. It could just be they're actually just following the market and have gone down a bit.
Yeah. And it's interesting what had kind of caused this little sell-off is, yes, the chip demand, but that's kind of been going on for a while. But it's also this realization that investors are worrying about this huge AI spend not paying off, and that industries like software, legal, and consulting, it's going to start this, what they're calling this AI cannibalization. So what was previously thought of, we kind of spoke about being more efficient in your role, but then that gets to a point where it actually, these legal and consulting in particular charge so much for their fees, insane.
I am shocked at how much lawyers charge.
Oh, yeah.
I don't mean this. I know that it's hard to get the degree. I'm not trying to poo-poo the career or how much intelligence it takes. It just blows my mind that someone could say, it's going to cost you 20 grand to look at these documents.
Yeah.
I'm like, what?
But yeah, so it's like, okay, well, these industries are actually not going to be able to charge as much if they're not doing majority of the work, or if there's this like AI is now doing it much more efficiently and effectively cannibalizing them. And it's like, if AI does the job, it's like, okay, well, why are we still paying lawyers and consultants in the same way if AI is just doing the job?
They're going to be valued less.
And so that's why a lot of these software, legal, and consulting companies that are publicly listed, their share prices are falling a lot because people are like, hang on a second.
Interesting.
We thought AI could make you more efficient, but hang on, it actually means that now you're going to charge less. I don't know how this will play out, but it's just when you invest in a company, you're looking at, okay, will that company be able to grow and be more and grow their revenue and their profits in the future? And now people are thinking, okay, yes, but there's now these sectors
that are valued less and
that
worth
might
less.
might actually be disrupted by AI a lot more than we had originally thought. So
that's so interesting.
Yeah,
because there's a few massive companies like AI legal companies like Harvey, etc., which are doing really cool things. I imagine that they will be at the forefront of the new legal approach because they're massively adopting AI. I would say the more ancient or old school law firms that are listed, are they listed? Are there even that many?
It's even like finance companies, right? Like financial advisors. You pay them a couple of grand. I don't know. It kind of depends on, they all have different models, but you pay them for their financial expertise, and part of that is like putting a plan together and all of that about your financial future. And I don't know, there'd be a lot of people listening to this, I reckon, that would probably disagree. A lot of lawyers, a lot of financial advisors that probably disagree, but this is just what's going on in the market and why it's kind of selling off, because there is this fear of this like AI cannibalization of,
But I mean, it's also not just those industries. I mean, we could sit here and list a billion of them. There's probably most people, and this is what we've spoken about for ages, the idea of people feeling fearful that they're going to be losing their job. And I guess it's not just as simple as you may lose your job. It's more, how can you make yourself as valuable as possible within the current environment? It's not to say your skills aren't valuable as a financial advisor or as a lawyer, but are you able to employ technology to enhance your performance rather than rely on the traditional ways you've perhaps made money before? I think is the new way to think about it.
And it's all going to be around human connection and having that personal approach with whoever it is, your lawyer, your financial advisor, your consultant, all of that. It's going to be around the relationship side of things.
I can't remember who said this to me, but someone said once, there's been iPads in restaurants for 10 years. There's still waiters. There is a place for human connection.
Yes.
And so that hasn't replaced the role of waiters, because we love the interaction of going to a restaurant and feeling like you can engage with people.
Just high-end restaurants are going to charge more to have that human waiter or waitress. And then, or you can have an alternative where you actually use an iPad or a QR code and the food's only bought out by a waiter or waitress, but you don't interact, and there's different levels of service. And maybe that's what will happen with, in the legal, finance space, is like you will get different tiers of service. But anyway, this is why the market has started to fall a little bit. But I just want to put this in perspective. And you know what? When the market fell in April last year, I was so stoked and proud of our audience, of our community.
Me
Because
too.
no one panicked. We didn't get flooded with DMs going, oh my goodness, should I pull out my money? Should I invest? Like, it was just so great. And if the market does fall, I want the next step for everyone to be like, what should I buy? We've learnt not to panic.
Yeah, next step
And now
is
the next
find the
step is
confidence to-
stocks are on sale. Let's jump in. Yeah.
Where are our shopping bags?
Yeah. We've got an update
Oh, God.
on Netflix, Warner Brothers, Paramount.
What's been happening?
Honestly,
Wait,
I feel like this is my own little Netflix show.
Okay.
Every time there's a new headline, I'm like,
could you
ooh.
give me like an ABC? And I'll guess what's happened?
A little recap. And I know we do this every time, so I'll keep it really, really short. But remember, Warner Brothers, Netflix came in wanting to buy it. Paramount was like, hang on a second, no, we want to buy it too. Warner Brothers is like, no, we want to go with Netflix. Paramount said, that's unfair. What do you think's happened now? A, the deal's done between Warner Brothers and Netflix.
Yeah.
B, they've just started talking again to Paramount. C, Paramount's pulled out.
The third, because it's so wild.
No, it's the second. I tried to make it exciting, but I couldn't because it was the truth.
Yeah.
But anyway,
So basically, they're starting to talk to Paramount again.
Warner Brothers has reopened chats with Paramount.
Stop. How annoyed would you be if you were Netflix?
Yeah.
You'd be like, stop
And-
flirting with the other person.
Well, it was nearly a done deal with Netflix, and now you've got this other annoying little pesky human.
I'm just so confused why Paramount is still getting a look in.
Yeah.
Aren't they?
Well, remember last week we spoke about how they were going to pay the breakup fee, or the, if you don't go with Netflix, there's a $2 billion fee that has to be paid, and we will cover that if you come with us. So that probably was a bit of a like, oh well, now we can entertain both. There's no, we're not going to have to pay a fee if we stop talking to Netflix. And and it's been leaked that Paramount is going to possibly increase its bid. It's at $30 a share and it might increase it to $31. I know it's only $1, but it really moves the needle for these negotiations. And
It's so unsettling working at any of these three businesses right now.
They've got 7 days to get back to Paramount.
Ugh.
It would be drop everything, all personal life commitments, all
No sleep.
like you would literally be in a boardroom for 7 days trying to nut this out.
Kind of fun to be a part of.
Totally.
I'm like, one day will we be negotiating some huge deal?
I know.
And we're like
sleeping in the boardroom.
you want $2 billion?
Yeah.
Well, excuse me, I'm just going to take a minute, come back in. Like, it'd be quite fun.
We'll settle for 2.3. Just like
Also, if anyone is an expert in the media space or perhaps, has some kind of interesting insight on what's going on,
Oh, they might not be able to say.
know someone will use voice disguise.
Yeah, when they do that on like 60 Minutes.
Can we please do this? We will keep you completely anonymous. Would love any insights.
Also, I'd love to know what it's like working. Like, is it just
Yeah.
business as usual?
Oh my God.
Warner Brothers must be like, oh, well, do I leave? Do I stay? I don't want to work for Paramount, but I want to work for Netflix. Like, how would you even, because remember, Paramount's owned by the Ellison family, which is the Oracle founder, Larry Ellison. Anyway, they're very, very close to Trump.
That's
so
right.
if I was Warner Brothers, more than Warner Brothers employee or executive,
I would not be wanting
and I'm
Paramount
going
to be buying me.
swallowed up soon by Paramount.
Bye, off I go. So interesting. I mean, I am so team Netflix. Are you?
Yeah, I just love Netflix.
Same. Okay, let's move on.
There has been a study out in Australia that shows that 50% of Gen Z women don't know where their superannuation is.
Should we do a little taking to the streets? That would be quite interesting.
Yeah, I'd love to know what percentage of our audience doesn't know where their KiwiSaver, their pension is. I mean, I have hopes. I have hopes for our community.
Okay, so
that it's less
anyone
than 50%.
listening, because this is your retirement fund. You could
Yeah.
be anywhere in the world. This is your 401k if you're in the US. This is your pension if you're in the UK. So we'll call it retirement fund in the poll. Can you vote? And no shame here, genuinely. Like if you
It's
don't know,
anonymous. Yeah.
it's exactly, no one's going to ever know. Do you know where yours is? Vote yes or no. And comment if you have any thoughts on this, because I personally didn't even know my pension was investing for years. I opted out. I mean, honestly, it's so normal to not know, but 54%.
50.
Did I just add 4%?
Yeah, you just added GST. Loved
Why
it.
not? Point is, that's a shitload of people.
Yeah. And also the scary thing with that is the shifting to a higher growth option. They've done the calculations with the study in Australia, could add $1 million to a 30-year-old's retirement balance. So these people are missing out on effectively $1 million. That's without adding any extra contributions. So like most of, and in New Zealand, like when you don't put your retirement money into, you know, you don't actively choose where to put it. It's put in what we call a default fund. And there is 300,000 people in New Zealand in default funds. So that is 300,000 people that probably have no idea what they're getting in terms of return, no idea where their money is invested, no idea where their, you know, like, and it's so concerning because more often than not, it's in a low growth fund because you haven't chosen anything else. So they, you know, the government, they can't choose where to put it for you.
Is that the same in other parts of the world?
Yeah.
It's basically around the world.
It's put into, I mean, it's not the same structures, but
essentially the concept's the same.
Someone has to make the choice for you, you know, if you have it, and that's a whole nother conversation in the first place.
I do think there's an education piece that we could do around helping to narrow down the products that are available because there's a lot on the market. It's really overwhelming. It's so hard to know what is best for you. And there's so many providers in every region, as in like every country.
Yeah.
I do think this is a really important space that we need to help with because also returns is so important. Values is important for people. Low fees is important for people. There's lots of different things that people look for when it comes to their KiwiSaver, but just not knowing and not making a decision is so disempowering and also really damaging.
Yeah. The number of people that I've spoken to that are like, I don't know where it is, or I know I've been meaning to change it for like the last few years. I'm like, that is literally like money you're throwing away. It baffles me that this is not top priority for people. And I don't know how to make it be. Like if everyone listening just sat down for half an hour, they could find out where it is, see what it's returning. And if you have more than 10 years until you retire, which most people listening to this podcast will, you should be in a high returning, high growth retirement fund.
Coles.
We've really got some Australian focused news here.
Yeah. Kind of here for it. I love hearing about different countries.
I mean, it is relevant for most places around the world, to be honest, but Coles, which is one of the biggest supermarket chains in Australia. So you've got Coles and Woolies, so Coles and Woolworths.
Woolies. You're so Australian.
Anyway, Coles and Woolies, two supermarket chains in Australia, they have 70% market share. And if we compare that to New Zealand, we have got an even worse situation when it comes to supermarkets. We have Foodstuffs and Woolworths, which own 90% market share here.
Whoa.
This is what we call a duopoly, which is when two companies control the market and therefore they can weasel out, you know, small farmers, suppliers, because there's nowhere else to go. You know,
I just had an absolute brainwave. Is that why the New Zealand grocery prices are exorbitantly expensive?
It's that, and also that we export so much. And we get higher prices for like butter overseas. So it's like, why? Right. But yes, it's kind of, if I created a bread company and wanted to sell my bread, I've got Foodstuffs or Woolworths, you know, that controls 90% of distribution. And so Australia, it's still 70%. So it's still quite bad. In the UK, there is so many supermarkets.
Yeah,
like
there's heaps.
Tesco, Sainsbury's, Aldi, Asda,
Iceland.
Waitrose, Iceland,
There's so
Morrison. Yeah, there's so many. And the biggest one, Tesco.
Wow, there is a lot.
Yeah. Which is great, right? It means the grocery prices are, yes, we've got a cost of living crisis, but grocery prices are lower, and you've got different ranges, right? You've got the Tesco's and Sainsbury's, you've got the Waitrose, Marks and Spencer's, you've got,
which means that people can shop based on what they can afford too.
Yeah. And Tesco's only has 30% market share, like, and that's the biggest. So like, if you think there's just so many in the UK. Anyway, Coles has been fined for hiking prices and then discounting them.
Isn't it the biggest no-no.
I know. And I'm like, you are one of the biggest retailers, and the supermarkets in Australia and New Zealand in particular are under the microscope so much, like all day, every. They must just have someone inside there just batting away all of these lawsuits, all of these kind of disagreements, frustrations, and when they come out with their financial results and they've made billions, it's, you know, everyone's up in arms. Like, it must just be like their CEOs get dragged through the mud in terms of the amounts they're being paid. Like, they're getting paid millions of dollars, yet people can't afford to put food on the table. Like, it's a whole thing. But I just wanted to highlight this because it's really important, even when it comes to things like Black Friday sales or Boxing Day sale, any sale, is just making sure that, is the discount and actually a discount? Have the prices been put up to just be put down?
It's so shit that we have to use our brains for that, though.
I know.
It's so unfair as a consumer to feel like you're constantly needing to have your wits about you because you're going to be taken advantage of. I hate that.
I know. And I think it's being a conscious shopper and being like, okay, what do I want? If you need a new TV for your house, for example, it's like doing your research, having your eye on it, saving up to so that you can afford that, and just not, I guess, being reactive to a sale. I need this, and I'm going to do my research and get the best deal, and or I'm going to wait for a big sale, like a Boxing Day sale or Black Friday sale. But I know going into what I want, and I know what the prices were leading up to that, so I'm not going to fall for this discount.
That is, honestly, I think that's so shady.
It's even things in supermarkets I've noticed here in New Zealand and actually in the likes of Tesco is they highlight the member price. Like, they make that bigger and like in yellow or red.
And that's actually,
and you think that's the price if you're just like casually going down the aisles and you're picking up the butter and the bread and you're like, oh, cool, it's only $7, only $8, you know. And then you get to the till and I'm like, hang on. And it's like the member price is that, and then the actual price is like what? Anyway, so it's all marketing. And I think it's just being a conscious consumer. It's hard, but it's also can save you a lot of money, right? And that's why people are like, support local, you know. Buy meat from the local butcher, or if you can afford it, you know. Buy fruit and veg from the local market, that kind of thing.
Because there's 10% hanging on by a thread in New Zealand.
Yeah, I know. And I would just love even a third supermarket chain to come in and just take a bit of market share. But we're such a small country, that'll probably never happen.
If anyone needs to start a business, that's a stunning business idea.
Yeah.
We do have a little bonus item before we get into some of the community questions.
Yeah. This is really quick, is that we are seeing a movement in Europe and US where women are increasingly rejecting the whole girl boss, we can do it all, like, mentality. The hustle culture, and they're embracing this burnout feminism, which is
love it,
which is all around rest over constant work, prioritizing boundaries, like all of that.
I am so impressed at how good you've gotten at this, honestly. Yeah. Even yesterday, Vic had two events, and we were meant to do a podcast record, and she messaged me being like, "Sorry, I'm not going to be able to do it." And I thought, I need to do that more. It's really impressive.
I headed into that second event and I had a headache, and I was like,
it's not good.
Already feeling like, come on, be on. And then the thought of the I was just like, I was like, why are events so draining?
Yeah, they are exhausting. But in a good way. Like I think because
imagine
you're
us after Eden Park, we'll be pooped.
We need a week on bed rest. But I love this. So is this the idea that we're trying to shift the mindset towards it's not cool to be burnt out?
No, it's not cool to be like, I'm a girl boss, I'm doing it all, I'm like hustling. It's like, no, we don't need to.
We're not overperforming here.
Yeah. It's like there is power in setting boundaries and prioritizing rest over just like constantly hustling and saying yes to everything. So, yeah.
What was the stat that you've put in there?
Oh, this was just another little headline, is that Citigroup, which is a large investment bank in the US, their CEO, Jane Fraser, she's one of the only female CEOs in S&P 500. There's only, of 500 companies, there's less than 50 that are female CEOs.
Was there meant to be some kind of uplifting connection to burnout feminism?
No, this is just another headline about women.
God.
Anyway, she's getting paid $42 million. Wow. Yeah, their share price has gone crazy, and she is now one of the best paid CEOs in the S&P 500.
Oh, that's so
and she's a woman.
Cool. Go, Jane.
Go, Jane. But then I was looking at the NZX 50, which is the main index in New Zealand. there is 6 women CEOs
Out of 50.
Out of 50. And in Australia, out of the ASX 200, so their top 200 companies, there's 19.
Do you say 19?
It's about
19?
10%. Yeah, 19. About 10% on all those main indexes are women, and yet we're 50% of the population.
I do think there's something around that we need to unpack with this more about, we just talked about the idea of burnout feminism.
It's the
I
support
think
system.
I think it would be impossible to be the CEO of a listed company and maybe this isn't true, but this is my perception, is that I cannot imagine having 3 kids and being the CEO of, how does that work?
It's all around, the invisible workload needs to be shifted as well.
Yeah, the support is not there.
The invisible workload is not invisible when you're a CEO of a, top 500 company in the US.
One thing I actually have been thinking for a while though, because I remember talking about this with someone, and I actually think it was a guy that I was talking to about it, and I was giving the stat around at one point there's more marks as CEOs in the S&P 500 than there were women. And he was saying to me, I wonder if women want to be in that position. Do they want that kind of stress? Do
That's
they want
fucking bullshit? I'm
no,
sorry.
No. I'm not saying it's right, but I was like, if you think
there's not the support.
So you don't think it's that? You think it's
like
just
the culture of a Citigroup, a Goldman Sachs, a Morgan Stanley, like all of those investment banks is relentless work hours. And if you don't stay and you don't hustle and you don't work all hours of the night, you don't make it to the top, and there is just not the support. The reason the majority of it is men is that because women are at home looking after the children in most cases. And so until we can flip that script and have a more supportive workplace in from the finance industry, but also have partners that are willing to step up and be a bit more 50-50 with the invisible workload at home, of course, that by default is going to fall on women, continue to fall on women.
Yeah.
And therefore, you're right, we can't be CEOs of multi-billion-dollar businesses and then expect to come home and then look after kids and make sure the house is clean and the laundry's done, and, if we're getting really it's impossible.
It's not the idea that women are allergic to or don't want that kind of stress or responsibility. It's that when men are in those roles, they have a huge amount of support to make it happen and to be able to focus on that.
Yeah.
And because we don't have it, a lot of us shy away from trying to ever achieve that, because how could we do both?
Yet women-led businesses, so when you have a public company that is run by a female CEO or a female founder, those companies outperform the S&P 500. So why is there not more women in those roles when we know they outperform, we know they're better leaders, they lead to better results? And I think you saying that they don't want, or your friends saying they don't want to be there, is not the answer. It's the system and the structure within those businesses or industries is not set up for them.
And outside the business.
And outside, exactly.
Because it's not just the way the business runs. Yeah. It's the childcare, it's the relationship dynamics, etc. So I'll send that to my friend to have a listen to. Okay, we've got someone that's okay.
Claire.
Oh, hotline. Shit, yeah. Okay, I'm going to play this.
Hello, Curve Hotline. Firstly, I really admire the work that both of you do, and all the content you put out is incredible. My question is kind of a follow-up from last week's question about different platforms for investing. I have some different holdings with 3 different platforms. And now I'm like, how do I keep track of these all? I was wondering if you know of any, like whether there's an app that you can kind of plug things into. There was also a previous episode where Vic was talking about, if one of your holdings increases in value, you want to keep it to the same proportion of what you wanted it. I'm just kind of trying to figure out how to keep an eye on everything, I guess, hopefully in one place. Let me know if you have any thoughts. Thanks.
Great question. I don't know any app that kind of consolidates all trading platforms, but there's a business opportunity for you.
Yeah.
If you have lots of different trading platforms because the company you want to own isn't on there, so you're like, oh, cool, I'm going to use another one. And that might have the company that you want to purchase. I can get that. But if you're just buying different stocks on different platforms just because, it's kind of like a bit, if you can have it all in one place, it just makes your life easier. I don't know an app that does consolidate them all. You might have to do your own little spreadsheet.
What about the piece where she mentioned, how do I keep the proportions the same? Because I think that's a really good question.
I think that you'll have to do that
manually
yourself. Yeah, and just see, okay, cool, I've got $10,000 over here invested in maybe some US companies. I've got $10,000 over here in some European companies and $10,000 over here in Australia, New Zealand companies. And if the US continues to do really, 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 really well, and that 10,000, is now 30,000, and the others have fallen and they're now 5,000 and 5,000. So it's more just being aware, like, okay, now you've got a different portfolio than what you thought you had, because you've got far less in these two regions than you do in the US. And if you're okay with that, that's fine. If you want to kind of rebalance, as we call it, you'd sell some of your US and you'd put them into.
Got it.
Yeah. And it happens at a stock level as well. Even if you're just on one trading platform, you could see that.
Something might get huge. Yeah, it's way out of proportion.
For and then the other thing might have gone backwards and be quite small, but you still have, think it's going to do well, so you want to put more money in, like all of that. So, yeah.
That's such a great question. And also, I love that it was a follow-on from last week.
Yeah.
Maybe this will become a theme and anyone that has voice notes, please send them in. It's so much fun to listen.
Voice as well.
Yeah. And then we've got one message from Pricier. Hi, Vic and Soph. I love your podcast. I wonder if people think we make that up.
No. And I think you guys are both really cool. And
I loved Vic's top last week. I had a request/question, please, and wondered if it's something that you'd cover in a podcast or if you can respond when possible. I've recently started investing monthly dollar cost averaging. God, that's amazing. That just basically means an amount every month. So like auto investing kind of, into a couple of different ETFs and a couple of individual stocks. I've noticed on the rare occasions when I check my portfolio that my overall return percentage shows as negative, even though that all of my investment returns are positive percents. Upon looking closely, I see that it's due to the unrealized currency losses. Should I be worried about this? My strategy is long-term investing. Can I say there are so many green flags in that message? So many. Firstly, dollar cost averaging, stunning.
Love it.
Secondly, ETFs, very diversified, amazing. And also some stock picks, have fun. Then the fact that she's really looking at her portfolio and that she's saying my strategy is long term.
Love it.
So many tips.
Love it.
I've noticed this before too, actually, and I've never known what's going on, where I'm like, why, if I look at my individual returns of what I've invested in, are they positive? But then, what is that?
So this is when most of us will invest in the US stock market because it's companies we know, it's, the most liquid, like you can, there's got the most choice, all of that. And when we invest in the US, we're investing in US dollars, yet our portfolios are in New Zealand dollars. So there is currency movements that we have to be aware of. So yes, even if Amazon's gone up 2% and say your whole portfolio has gone up 2%, but the currency has fallen 5%, your overall return is -3 because you got it. The movements in the currency do impact your portfolio.
Annoying.
There's no way around it unless you invest in New Zealand stocks with New Zealand dollars or US dollars. You've got a US dollar portfolio and you're investing in US stocks, but most of us will invest globally. So it's part and parcel of investing. You can try currency hedging and all of that if you wanted, but I'm just like too hard basket.
Wow, that
it
is
ebbs and
really
flows.
annoying.
It ebbs and flows. It can work the other way as well though. It can magnify your returns because your portfolio might go up 2% and then the currency moves 5% and your return is now 7%. So it does ebb and flow and there's kind of not much you can do about it really. It is frustrating, but yeah. Sorry.
Okay. No,
but really great that she's noticing it and she's like, hang on a second, why is that not the same as that? And
such a smart audience. Our listeners are just the smartest. Thank you so much. I loved this episode, Vic. Amazing research. And for anyone that wants to either rate the show, you can do that wherever you're listening. I think that one of the news stories we didn't get a chance to get to is that Apple's now having video, so you can watch this podcast soon, I think, on Apple.
Yep.
If you want to watch it on YouTube, you can. There's links in the podcast show notes. And for anyone that missed it, last Friday, our first episode of our brand new podcast series dropped, which is IOU. And this is IOU in brackets, some money education, and it's for beginners. So if you
I owe you some money education.
Thank you.
Like
that was
you didn't give it to me when I needed it. Now I owe you.
Anyway,
yeah.
this came out last week, and we've got a practical sort of like a podcast that you can listen to or watch. And yeah, the first episode's dropped. It's got Lucy Blackston in it from Shit You Should Care About. She's awesome. And yeah, we hope you love it. There's some fun branding that we've put out. And yeah, if you know anyone that's a beginner, or perhaps you've listened to this episode and thought, shit, I'm kind of actually need to probably upskill on some of the basics, it's a really good place to start. So you can find that everywhere. We're talking about it everywhere. And we will see you next week.
Woohoo.
Have a great week, everyone. Thank you so much for listening to The Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode, because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday, but until then, listen to Erasing the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of The Curve Weekly on Monday.
Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.